Yeah, awesome. Sounds good.
Yeah, so hey everyone, if you're watching, hi, happy Friday. We're gonna go live
Yeah,
in
awesome.
just
Sounds good.
yeah. So hey
Few
everyone,
minutes.
if you're
Wait for
watching,
everyone to jump in and
hi, happy
start.
Friday. Yeah, start watching. It's it's always a little bit of a waiting game, but anyway, yeah, it's funny because it's like about like it's like morning where you're at. It's like or noon. It's like it's a snowy. It's snow's coming down hard right here. Snowy afternoon here, evening, and it's kind of funny because I've had people from quite a few different time zones on this thing before. A lot of mostly East Coast time, U.S. type thing. Some Mountain and Pacific, but then there's been like a few Europeans, and then I've had a few like Aussies and Kiwis, and that's always tough for them.
Hmm.
I believe it was on the what is it, the Christmas Eve show that I did. One of the guys I had on was in Australia, and so he like woke up at 5 to jump on the stream. I told him he didn't have to, but he's like, "No, mate, I'll join." So I can't imagine being like halfway like competent for anything at that point in the the day.
Yeah. I'm usually a morning person, but not that much of a morning person.
Yeah, I mean that gets a little rough, you know. Just that you get so tired by like the evening that sometimes the best work or productivity you do is like at night too. You got the more quiet, creative type stuff, and then some of the early mornings get good for like the rush of like activity and ideas, and then like I mean, there's a reason why I guess a lot of programmers do pull the midnight shift.
Yeah, in crypto, I think it's partly that crypto never sleeps, and it's partly that programmers never sleep.
Yeah, yeah. Which I mean, everyone does sleep. It's just that when you're in that world, you just you sleep whenever the sleep makes you, rather than you choose to sleep. Right?
Right. Yeah.
Kind of pushed into a little bit of a corner there with that. I knew this one guy who's doing a lot of the. He's officially the CTO of the largest Dash development group, and he's he's doing a lot of the coding himself these days, though, just because he's trying to push out a big release, and so it's just like you know working through the night. He's done a few different like. It'd be really cool to have this feature done, and he just like I'm just gonna do it, and he just like 12 8 12 hours later through the night it's just like done. I'm taking a nap. you know that gotta
Yeah,
be
I
pretty.
resonate. I resonate with that a lot. There's Naval Ravikant talks about working like a lion, and he tends to work well in 2 to 3 week spurts where he just sprints to the finish line and builds whatever he has in mind, whatever he has the inspiration for in the moment, and then takes however long off until he feels the inspiration strike again. So that's not something I'm positioned to do quite yet, but I do resonate with that style.
Yeah, that's I do have like hills and valleys of my own thing. Like I am definitely not like a regular 9 to 5er. The problem I guess comes when you're creating content, especially you have to deliver it constantly. It's got to come. The spice must flow. So there's like a little bit of a you can keep that going for you know a cup like a 2 3 hour work day when you're on your dip, like as long as you've prepared it ahead of time. So yeah, there's a lot of that.
Yeah.
I still got to figure out how to like do stuff. I've been trying to build my website, and it's been forever since I touched WordPress, and now everything's different. And it was like the 10 years since I've done that, and so now it's just like, oh, well, I got to figure this out from scratch, and I just want to do that. And then everyone else is like, hey, remember that article you're supposed to write? I'm like, oh, damn it. So there's a lot of that. All right, let's see. Is anyone? Yep, there's a couple people watching now. And let me just roll the intro graphic, and we'll do the official start. So hey everyone, and happy Friday. I'm joined by the one and only, for there is no other, individual named Nate. How's it going, man?
It's going well, Joel. Thanks for bringing me on.
Yeah, no problem. I've been kind of following your stuff on Twitter for a little while, and then it turns out that we had a mutual in, was it Brian?
Yeah,
And
Brian Harrington, great
yeah,
guy.
he's he's the guy who, I mean, I don't know if he only works in spurts, but like every time I see him, I just see like the intensity of the eyes, like looks like a lion looking at a gazelle. He's just like ready to, like, it would be if you didn't know he was such a nice guy, it would be kind of intimidating. But
Yeah, right.
you know,
Long Viking beard, nicest guy ever.
yeah, the first couple of videos of his I saw, we was talking about circular economy and stuff and doing whiteboard stuff. I thought, is he maybe like a little bit of a douche because because like the confident energy, but then you just know it's just no, he's just a really nice, passionate guy. Oddly enough, I have connections from an old boss from here in New Hampshire with him as well, which is such a small world. But we shouldn't bore everyone with that stuff. Just real quick, everyone, you can, if you have one of my NFTs, you can go into my Discord and comment in the super chat channel. I'll put it up on the screen. And yeah, please do so. And I have a backup, which is Cointree, cointr.ee/the desert links. And you can leave a little donation, and I'll put up a super chat. It's been a little wonky lately, so if you do something, nothing pops up, just message me in the regular live chats and be like, hey, by the way, I paid you. And I'll just take your word for it and just read your stuff as I work out this whole goofy super chat system. It's kind of yeah, I'm definitely ramping into the leveraging NFTs more. What I'd like to do is have a link on my site that lets you like buy an NFT during the show and just like jump into the live chat to like start doing that. That would be pretty cool.
That
Yeah. So, all right, let's hit the new stuff. So, first, oh gosh, judge rules Celsius owns funds in earn accounts, paving the way to stablecoin sale. Judge Martin Glenn found the terms of use of the earn program unambiguous, and besides that, treating account holders as unsecured creditors was more equitable. So, I'm sure there's a ton of like detail behind this, a bunch of nuance, but right away, as someone who doesn't use custodial platforms, definitely not like KYC platforms, it's definitely struck me as, wow, like you put your money on a platform, you're kind of promised a return, and then when the platform goes belly up, it's not just they can't offer you the service anymore. Your money's theirs. It's not just, well, they lost it and then they're liable for losing it. It's like, no, sorry, it wasn't your money. You kind of like you're kind of an investor in the platform, although you never got equity from the platform. It's kind of a messed up ruling, it seems like. I mean, I understand that the terms weren't very clear, or they weren't very clear to the end user, apparently, but it still seems a little bit of a messed up precedent. I don't know what you think.
Yeah, I would take issue with it just being. I take issue with CeFi in general as piggybacking on DeFi and trying to pass itself to normies essentially as the real thing, and then to have seen Celsius collapse in such a fantastic manner, it's a little disheartening. And now, to see this is no surprise, but definitely it adds insult to injury.
Yeah, I kind of wonder why people would trust that kind of thing. I guess people don't do due diligence, and I guess people don't honestly do due diligence with banks. Everyone has one, you get one, and there you go. And it's just sort of like the herd immunity type deal. Like, enough people would have sued if enough people got screwed, so I'm safe. And I guess they sort of applied that to crypto banks, but they're not banks. They do their own thing, and they're kind of not subjected to the same rules, I guess. But yeah, it's kind of crazy.
Yeah, Celsius is not FDIC insured, I take it.
Yeah. Well, that's the thing that makes it it's very strange with a lot of these protocols. Is I think that, or a lot of these platforms, I should say, not protocols, is the the mechanisms for revenue just kind of seem to be glossed over. It seems like it's staking. And because staking came from native crypto protocols like a proof of stake protocol or other things, or DeFi liquidity provision, all that kind of stuff. I guess it's because it's not addressed, like they don't say how they make their money. And I guess protocols don't say it either, but since the code is open source, you don't have to hear them say it. It just people, I guess, assume that, it must be some crypto magic. It's not like, no, it's just they're taking your things and lending them out, and then at some point everything could collapse, as it can with a bank, except banks are supposedly insured, and this is not a bank, so it's not insured.
Yeah, definitely. I think staking is one of those crypto magic kind of tools or mechanisms that people think about. I remember fielding a lot of questions and a lot of suggestions and ideas from people back in, I want to say this is really popular 2019 to 2021. People would always be like, and we have this token and we're gonna use staking. Staking is the main way that you earn money from this token. It doesn't do anything, but people can stake it for more of that token. And I think that's just like the staking is the thing that if you tell people you have it, they're interested because they know that means returns. So it turns people's BS filters off for your whatever the investment is or whatever the protocol is.
It's kind of, yeah, it's definitely like that. It's kind of a dance between two things where, first off, what I do whenever I can't understand, whenever I'm making an economic transaction, like a trade or I mean, I don't like trade crypto, but I'm saying whenever like I buy something or I do something for someone in exchange for a thing, I always want to know what they stand to gain. So I can say like, well, you want this, I want this, and it makes sense for both of us. And so there have been a few companies where I've just asked, how do you make money before I want to use it? Like, I'm not using your service until I know how you make money off of this. And, a few people, I mean, they've all, as far as the ones I've asked, been pretty candid on that. Like, you asked an unspecified wallet provider, like, how do you make money doing this whole thing? And they're like, well, we take a small cut of all the services, like the swap fees and on-ramps, off-ramps that are in there. And then we license our back end to some other companies. Like, oh, okay, I get it. I can understand now. But then also with yield and earning, people want to make money. And that's one of the most dumb kind of observations, yet, it's there, right? People want to do better than they previously were doing. And that's why they're in crypto. And there's other things like, well, I want to do this one thing that I can't do anywhere else. But most of it is like, well, I'm going to make money. And there's absolutely nothing wrong with that. It just, in fact, everyone who puts money, or used to put, I guess, in a savings account, I don't know if people really do that anymore because it doesn't really work. But like anyone who invests, anyone who buys like, long-term, stable assets like, precious metals and stuff, everyone there is trying to make money. Everyone who goes to a job is trying to make money. And so everyone's trying to make money. There's nothing wrong with that. It's just that it does make people like, fine, can I make money this way? I'll do it. Not, should I be making money this way? Am I going to actually lose money even though I think I'm making money?
Yeah, it's Celsius's business model it seems to have been make risky investments with user deposits. And I wonder, Mashinsky never struck me as a stand-up guy. And I wonder if they had this kind of idea the entire time where they're like, well, worst case scenario, we lose all the money and we just go bankrupt. I don't know if has Alex been arrested? Are there any charges toward him that we know of, the CEO of Celsius?
I have not heard of any such charges. I do believe there's some lawsuits against him now, or against Celsius at least, for what they've done. But it's not like, it's kind of strange. It seems like maybe they structure their agreements a little bit better. Maybe it was like, we take your money and we give you a return. And in there was like leeway for them to do whatever risky stuff that they do with it. And when they lose all the money, it's just like, well, it didn't work out. And then people are suing, being like, well, you misrepresented this slightly. Like with the way you presented it, you didn't present the risks accurately. Whereas something like FTX was more seen as a direct like exchange. Like you hold customer funds one for one. If you're in a lending product or something else, I'm sure that's different. But like you're supposed to, it's like a bank. You have the FTX card, you swipe, you exchange this asset for the other thing. You don't have an expectation, a reasonable expectation, I should say, of them not having everyone's money. And so at that point, that seems, especially when it became so insane, and they have like single groups called wire fraud and stuff like that. That's when it becomes like, oh, this is criminal. This is very criminal. This isn't just a bad and scummy business move. So I think that that's the key legal, I would say, difference. I don't know how much of a difference I actually see. I think that with Celsius, it seems more like they were just trying to make money, and they made risky things, bad decisions, and in my opinion, unethical decisions to make money. But their expectation was always to have customers be whole at the end of the day. Whereas I don't know if I have the same faith in FTX. I think that's more of just like a big fraud, and not like a fraudulent attempt at making money for the business, but just a fraud. So, but at the same time, I mean, they're both, in my view, very ethically suspect.
Yeah, definitely. I think the my initial impression of Celsius was skepticism toward it, because they were guaranteeing, I don't know, maybe it was like 20% or something, which was relatively low for what DeFi was providing. But I was thinking, best case scenario, they're just going directly to some simple protocol, yield farming, and meanwhile they're holding customer deposits. So in the best case scenario, a user is getting less yields and far less security because they're not holding their coins.
Yeah, and that's what a lot of these kinds of protocols, or platforms, I should say, probably did. Didn't Was it Celsius that had a lot of exposure to Luna?
Yeah.
I think it was not, but definitely not just Celsius that had a lot of exposure to Luna. I mean, a lot of things had exposure to Luna, but I guess that's the kind of thing, if you can't figure out Luna, I mean, Anchor, I did use, like, the only crypto I've ever had that went to zero was UST. And I didn't have very much of it. And I normally wouldn't have, like, cared, except I had a friend who I trusted who said, oh, this is really exciting how they're doing this algo stuff. And I kind of looked into it and I'm like, well, I'll try a little bit. But I was, so it's like when it all went to zero, I was like, oh, well, I don't care. But, interesting lesson learned. But the technical aspects of, like, getting a wallet, linking it, depositing, it was not entirely, like, boomer friendly, I should say. And so because of that, like, I understand a lot of businesses are just like, well, instead of the 20%, we'll give you 12% and we'll literally do the same thing and just take the boomer fee, And
Right.
there's a lot of exchanges and platforms that are kind of doing that were kind of doing that. My personal opinion is, in the future, CeFi will be almost non-existent. It'll be almost all DeFi, that the CeFi will just be like front ends that plug into to kind of help. But like almost all the stuff will actually be done on DeFi. And that's kind of what was, I don't know if you could ever call, like, the Luna UST stuff fully DeFi, but that's kind of what a lot of companies were doing, except they were charging just a massive, like, boomer fee. And instead of that, it'll be just like a very minimal, which will just be a purely UX fee, and not, well, UX and knowing what you're doing and a bunch of dishonesty in between.
Yeah, that's a really interesting view. I've had something similar kicking around my mind the last few weeks. I was listening to Eric Voorhees on Bankless talk about Shapeshift and how they've decentralized that. And this may have actually even been on other podcasts, because I went down a Voorhees rabbit hole just listening to him, because Shapeshift is now essentially a Thorchain front end. It's a front end, a user friendly front end for a bunch of decentralized exchanges. And I think for crypto to reach further than just the participants that we see now in DeFi, which are highly technically capable users who understand most of the layers of this tech stack. For crypto to reach beyond that, it's going to have major UX improvements, and not just UX improvements, but simplification and education around what these protocols are doing. And I see Eric as the forerunner of, kind of like the first person to have created one of these protocols that abstracts all of the technicalities away from a DeFi protocol. So a user doesn't necessarily need to know how to use Thorchain or how Thorchain works. They can just go to Shapeshift, connect to MetaMask, or connect whatever wallet they want to, copy paste their private key or public key. Don't copy paste your private key.
Yeah, of course.
and then just trade assets in a decentralized way cross chain. And so, yeah, I definitely agree with you on that. I think the user experience needs to be simplified in a lot of these cases.
Yeah. And I think it's happening really fast. I mean, obviously, this could be like the DeFi rabbit hole segment here, but like, I know of almost no Thorchain front ends. Almost every single one of them is a Thorchain plus, Pancake Swap plus, Trader Joe, etc. like aggregator that just you assume is Thorchain, but there's like all the like the siloed dexes are all kind of plugged in there too. And there's a Thorchain fork coming out hopefully very soon called the Maya protocol, which is just very similar, except we'll have like a few tweaks, but also some different assets. So if you're trading like, say, Dash to Litecoin, and it might not be you're using a Thorchain branded like front end, but it might be using Maya for that to then to Thorchain. It might be using a collection of these, and it's surprising to me just how like dexes are very new. Dex aggregators across chains where you can move seamlessly from one asset to another are even newer. Yet I'm really surprised at how good the UX has gotten so far, just based on like tying what I would think would be a very complicated thing, which is tying these things together and actually finding the cheapest route for a swap. And I hear that you'll be able to do stuff like do half of the trade across each of these networks because of like slippage, to try to reduce slippage, and then you just don't even know that you're using two different blockchains to do this whole thing. You don't even know you're using any blockchains. You just hit swap in the wallet, it goes zoop, and we're really close. And so that's why these CeFi behemoths are going to end up starting to run into solvency issues over time, which is a great segue into Huobi confirms 20% layoffs, denies insolvency rumors. Key Huobi execs, including Huobi Trading Group CFO Lily Zhang, allegedly left the company a few months ago following a new shareholders takeover. Of course, Justin Sun's involved. And yeah, they basically, because of the bear market, etc., confirmed that they're laying off 20% of their employees. They were also kind of unresponsive yesterday, which is a little scary. But yeah, they basically say, "Oh, we're still running. Everything's still fine. We're not gonna go bankrupt. We're going lean." But that came shortly after Justin Sun publicly addressed rumors of Huobi's insolvency, which in this little tweet thread here, where he's doing that, it's a lot of like corporate word salad, and take steps to protect blah blah blah. But this is a security and all this kind of stuff. That's like, okay, why are you saying all this? Like, it's a little suspect. And so this is definitely not a move on my part to spread FUD in any way, shape, or form. Before anyone gets ahead of that, it just seems a little suspect, especially when so many platforms have been kind of experiencing issues at the end of the bear market. So, or in the middle of the bear market, I should say, right here. I don't know what your hot take on that might be.
Yeah, no, I think it's anytime kind of any news is bad news toward the bottom of a bear market.
Mm-hmm.
It anytime I see a headline like this, I'm like, oh, here comes another one. This is another part of the contagion, and
Another one bites the dust.
I think a lot of people's reaction is probably the fear, by default, just toward whatever news we're seeing. It's like we're automatically going to be thinking this is another step downward. This is going to be another drop for Bitcoin and for whatever whatever other tokens Huobi might have a lot of
Mm-hmm.
if they're insolvent, which I don't tend to think they are. My suspicion is that is probably just a standard exchange operating, halfway across the world, having delay in response time.
Yeah, I mean, could be. I do think that when you have, well, maybe this is little harsh of a phrasing of that, but when it's a bad sign when you're bought by Justin Sun. Usually, usually he doesn't buy like top like you know he buys name brand and stuff that he can when it's on a little bit on the struggle bus, like Steam, right? The Steam it. I mean, it was already kind of on the decline a little bit, and then he got Steam it, and then the whole Steam blockchain ended up being forked. And Hive is, from what people, I don't really use Hive very much anymore, but from what people use are telling me, it's doing great, but it's not like it's not like the belle of the ball anymore. It's not on the top. So it's like if you get an offer to buy, if your company starts getting offers from Justin Sun, you might want to start like shopping around resumes. I don't know.
Yeah, we maybe may see a user activated soft fork of Huobi Exchange.
Yeah. At some point, I honestly, like, to that previous point about the DEX and DeFi future, it might just be that, like, the crypto space grew so much and a lot of businesses came in to fill market demand, but market demand flowed from CeFi to DeFi so much that now the same businesses that have been built to a certain scale to deal with all this demand, the demand's still there, just not for them, and they're starting to have to contract. And that's one thing where a lot of people were spreading around rumors of like Binance insolvency and things like that. And I mean, I do think that Binance probably was engaged in some, shady things to make money or whatever. But there might be something up, but I think that they would be one of the last to go. Not only the biggest is last, but also before this whole DeFi boom happened, they were already doing their own DeFi, so to speak, their seat DeFi, I guess, like the whole Binance chain stuff. And I didn't even understand why they had this token that they were using all over the place. That was before it became, I guess, sexy to have an exchange token that then tanks when there's a headline, but whatever. And it seems like, CZ is ahead of the game. He's always like a step ahead. Like he sees there being a giant threat to his business model, so he jumps in there so that if his old business crashes, his new business, which is not really, I mean, technically a decentralized protocol, but let's be honest, like a business, then does really well and he's still okay. His ability to pivot seems to be pretty uncanny.
Yeah, I think to your point that Binance may well be the last to go, and I would say the last of the foreign exchanges that are not based in the U.S. Because I put Coinbase and Kraken up there, way outlasting Binance and some of these other exchanges, assuming regulation doesn't entirely shut them down. But I think Binance's biggest flex was when Coinbase laid off something like 20% of their workforce, and Binance CZ came in and said, "We're hiring."
Yeah.
That was magnificent. And you look at that, you look at how he essentially just pulled the last Jenga block from
Hmm.
FTX, and you got to assume he's got something more than meets the eye. I mean, he's just a very intelligent guy, and
Yeah.
so I think he probably will be. the last exchange standing.
Yeah, and I can't think of a single Binance move that I would think is like dumb or a naive or something. Like everything seems to be very well thought out. I'm sure there have been plenty of faux pas along the way, but like they seem to be very well couched at least. Like
Yeah.
seeing that the DeFi boom is coming, seeing that it's ETH only, or that's where it hits first, and being like, well, we can see it's getting expensive. We can see that people don't care that much about decentralization, but there is a good market for cheap. So, in the spirit of the old like Chinese knockoff, right? He makes the his version and fills a customer demand there. And of course, people are looking for Coinbase competitors, and they do Binance US. And there's a lot of despite supposedly being completely separate entity, which is what you have to do, I guess, to thrive in the U.S. There's a lot of evidence that points to commingling of funds between Binance and Binance US, which they're not supposed to be doing, but they're probably doing anyway, and just like do the satellite thing there. And then as far as one of the most frustrating things for someone like me who tries to use crypto as much as I can has been just the lack of spend. It's becoming a little bit easier to spend these days, but the lack of merchant tools has been insane. Like there's a bunch of e-commerce tools that are kind of like half baked, but point of sale ones really are not that good at all. And Binance Pay and the Binance like the merchant tools seem to be making huge like progress. And it's just like, oh, like everything that they're in seems to be, it's like don't count CZ out. So I think as long as he's healthy and like running the ship, there's going to be a strong future in the Binance stuff. And he just seems too like, too well versed, too humble and ruthless at the same time, where he's not going to do these big splashy ads. Like I have to admit the Coinbase QR code ad during the Super Bowl was really kind of dumb, where that was a huge waste of money. Instead of that, he's hiring, picking everything up on the cheap, and at the same time he knows how to destroy a competitor when he needs to. Like it seems like I wouldn't count on them going anywhere in the near future.
Yeah, CZ reminds me of Sam Walton. Like I think, and Walmart in general as an analog to Binance from traditional business world, where they're expanding laterally everywhere. I mean, I think the best example of this, and the most impressive thing I've seen from Binance over the years, is how they've added additional functionality to their token, and none of it is strictly necessary, but they've found ways to integrate their token to make it accrue value very well, considering that it's a completely centralized coin. So the BNB, I'm talking about the BNB token and how they've gone from 50% discount on trading fees on Binance back in 2018, 2019, to they were briefly doing a pilot of a different chain. It was like Binance Chain, and now they have Binance Smart Chain, and they're using it as collateral for different things within that protocol. So it's got they're really good at value capture, and Binance ironically has some of the best tokenomics, but its fatal flaw, of course, is that it is a centralized exchange, and ultimately depends on that and the brand of Binance as a centralized entity, and that could change. But to speak to I think the one thing I take issue with Binance about as a centralized exchange is their fractional reserve of certain coins. So I know for sure this is happening with Monero, and I have seen suspicion that they're doing this with Bitcoin Cash as well. And it makes sense. It makes sense, especially with Monero, where you can't show a proof of reserves for Monero without giving away the view key. So
yeah, it's almost stupid to not in a certain weird way.
yeah, definitely. And so I have a whole long thought on this, but in short, Binance is able to get away with that because they're the biggest exchange, and so again, potentially the last exchange standing. But if there is something that's going to take down Binance, it's going to be a bank run on however many deposits they're fractionally reserving there.
Yeah, and I do believe the Monero community tried to do a bank run on them at one point recently.
Yeah, the problem is like no one cares. Like Binance can just freeze withdrawals for a week,
And
and
they did, didn't they?
yeah, they did. They did as soon as ahead of the bank run, actually ahead of Monero. I wrote an article on this. I wrote maybe two articles on this, but what I would so from a as a free market, a proponent of free markets, I would actually love to see exchanges. This is my hot take for the day. I would love to
Mm-hmm.
see exchanges be allowed to fractionally reserve things because that would introduce competitive forces in the market. And the thing that I would like most about it for Monero is Monero has what I call a price floor. So there is a price at which Monero will bounce on exchanges. The price of Monero will bounce if it dips below this price floor because Monero needs to be worth a certain amount of money to facilitate all of the transactions that it does. So the dark web has, let's say $100 billion flowing through it, and half of that is in Monero, more than half now, because Monero is, of the crypto denominated traffic, more than half is in Monero. And so Monero has to be worth, let's say, in aggregate, $50 billion divided by the number of times each coin is used. So if you say Monero is used 50 times, each Monero on average is used 50 times a year, then you divide that into the $50 billion figure, and you have $1 billion for the value of all circulating Monero, and divide the number of coins there, and you have what I call a price floor, the intrinsic value of Monero based on its use in commerce. So fractionally reserving, the Binance's fractional reserve is actually keeping the price of Monero suppressed uh, and keeping it relatively close to its price floor. This is what I've been
Mm-hmm.
seeing over the last few years, and looking at how stable Monero is, it makes sense. So in a way, I'm actually happy that Monero is fractionally reserving. That Binance is fractionally reserving Monero because it's keeping the price stable, which helps adoption, which helps real cryptocurrencies with a real value proposition um, get adopted in the world, especially in this darknet um, arena where Monero is very well suited.
Yeah, I mean that's kind of an interesting take on the whole like price floor type thing. I have noticed that this has been the year of the price floor, or this maybe not this year because there's not very much year, but the last one. Uh, I've definitely noticed there's been a few coins like the more speculative coins have had a lot more bounce, and that's been one of the more fascinating things about Bitcoin. Is Bitcoin used to be the safest haven, and now it's a little more speculative, a little more up, a little more down than others. And like there's a few like Monero and Litecoin have been the big ones, but also like Bitcoin Cash, Dash, Zcash have done well against Bitcoin during the bottom of the bear market, which it's supposed to not be that way. It's supposed to be Bitcoin is a bear market darling. But then and then a lot of these coins have also jumped dozens of places in the market cap rankings despite not really going up in value that much, because there's like the base utility value that it just can't really go below, and everything else, just the bottom's falling out of it and just kind of going away. And
Yeah,
I guess
exactly.
the same thing on, I'm sure, Binance, on Binance Smart Chain or whatever. I'm pretty sure that if people try to dump that to oblivion, there's not much give there, probably just because of just how much is running and dependent on that. But that's probably maybe wait like 15 minutes and then talk about the deep parts of the tokenomic stuff. Let's hit on
Sure.
this Genesis. Oh, good. I'm not sure if you saw this drama, but Genesis tells its clients it needs more time on financial woes after Gemini demands action. And this has been a very strange thing because Digital Currency Group is kind of like the elephant in the room as far as the 800-pound gorilla or whatever you want to call it, and it's kind of funny about all the suits of crypto, whether it's the Brian Armstrong, the Winklevoss twins, Silbert, Barry Silbert, and all them, are all like the gentleman's club of like, everyone always has conspiracy theories against and all that kind of stuff. But they're all like, polite and tight and kind of tight-lipped on drama. And here we have an interesting case where Genesis, which is what behind Gemini's lending protocol or lending product, I should say, it goes bust, and now you have the Winklevoss twins, or Cameron, I believe, just doing a public spat against Silbert, saying you owe us like $1 billion. Like, it was a little wild, have this whole thing back and forth. But yeah, it's kind of funny to see like the parent company of Gemini getting yelled at by Gemini over this kind of stuff. It's very like it's a crack we don't usually see in that sort of like iron fortress of the suit part of U.S. crypto. I don't know what you think about all that.
Yeah, I gotta believe this was like their last resort. I'm sure they've pursued all of the other avenues based on how professional these guys usually keep themselves. The first sign for me that Genesis might have a problem was, or Gemini might have a problem was back in, I want to say November. There were triple digit yields for or triple digit requirements for borrowing GUSD, their stable coin. And they spiked a couple times, but there was maybe a 2-week period where it was 150% to borrow the GUSD. And so on Aave, which has the largest liquidity for GUSD, what that told me was there's probably someone with an open short position on GUSD expecting it to blow up any day at that point, because you wouldn't keep 150%. You wouldn't pay that for something that you think might happen in the distant future. There were people with millions of dollars that were expecting Gemini to fall apart imminently. So it seems like maybe they weathered a small, or maybe they weathered a large crisis internally, and this is the consequence of that. So my suspicion would be that they knew as early as November that this was a problem, but now it's come to this, that they're airing their dirty laundry in public as kind of a last resort to get Barry to pay up.
Yeah, and I wonder, like, it sounds like he doesn't have the money, or he doesn't have that money, I should say, and it's got to be, maybe he's kind of like doesn't want the rest of the empire to have a cascading effect if he has to start selling or shuffling around some assets to like make this one thing whole. And so he's just like, you know what? Let's just leave these people out to dry, and this is the least of the damage to my empire that I can sustain. That's probably kind of what he's trying to do.
Can you imagine if Barry had to sell some of those more illiquid assets that he holds, like Z Classic and Zencash?
Yeah,
it would completely liquidate all the order books.
I know. I mean, first off, who has Z Classic? Who cares about Z Classic? No offense, but like, it's literally just a copy and paste of Zcash, except you don't fund the development. And
you see what that gets you.
Yeah, and also like Horizon, Zencash, or whatever. I'm not super deep on them. I have had Rob Viglione on my podcast a few different times, and it seems like they're working on some cool stuff. That being said, I have heard some DCG employees speak ill of the situation, I guess, with Zencash. Just, it's like basically, there's a little bit of propping up going on, I guess. And so if you could, like any relatively illiquid asset, you just can destroy that, and then all of a sudden, like if you sell a little bit of it, then the rest of it's gone, and it's
right.
It's like you're pawning your possessions to pay the rent. It's like, well, what if you could just not pay the rent this month, just push it off to the next month,
Yeah. Well, this is kind of the position that FTX was in as well, where they had illiquid assets marked as liquid on their books. So FTT was marked to market, and so on paper they might have been able to pay off some of the debts that they had, or they might have been able to pay back customer. At least they had on paper the assets that they needed to pay back customers to make customers whole. But in reality, the value of FTT and the value of all of the Zencash and the Z Classic that Genesis might hold is not what they would account it for on their books.
Yeah. And the thing is, FTX was many like layers worse than that, of course. With like, I don't even know if they had, I mean, I guess that's the optimistic claim, is that they had illiquid assets to cover their listed as liquid positions. There's a lot of like not having money that they had too, which,
Yeah, I mean, I could.
it's gnarly.
We could go down some rabbit holes with FTX, but that might be. What else was in the news this week, FTX wise?
Yeah, that was the last little thing here was an FTX thing, which I think was hilarious. Sam Bankman-Fried's lawyers claim he needs Robinhood shares to pay for his criminal defense. The legal team confirmed the U.S. Department of Justice was in the process of seizing the Robinhood shares, but said SBF was compelled to reply, given other claims. They filed a motion that basically they wanted to stop the shares from being seized. Supposedly, he owned more than 450 million worth of shares. And he's like, well, I can't defend myself without it. And it's, oof. I mean, that's a tough spot to be in for the bank man.
For a former billionaire.
Yeah, but I mean,
That's
450 million is not a small chunk of change. Even if it's illiquid, you could get a lot out of that, right?
Oh wow, yeah, I just registered that. He has
Yeah.
450 million worth of shares.
Yeah. Now, I don't know if that's personal, right? If that's he owned or he held title to, because that would be, well, that's like $500 million right there almost. And like that seems I mean, he was on paper at least, a multi-billionaire, but I don't think that most of that was in, or such a significant chunk would be in Robinhood shares. But I mean, it is kind of funny also. It's completely different than like the Celsius situation, where you have a person who the company lost money and lost the customer money and all this stuff, but the individual's own assets, as far as I know, are not like suspect. They're acquiesced to be his assets to do with as he pleases so far. Whereas when you're involved in a not just losing money, but a fraud, a direct stealing of customer money to the tune of like 900 million or more, like a ton of money, then at that point, anything you have up until that amount, I'm sure, is in possibly in excess of, right, is just considered like not yours anymore. Like maybe not. Like, well, let's wait for the case to be over. And so it's unfortunately, if this was a different case like this, it kind of highlights some issues with the justice system. Whereas like if someone wanted to really screw you, they could just allege that you stole and therefore all your assets that you need to defend your innocence are then not able to be used towards the defense of that innocence. And you do need a lot of money to defend against a high profile case. So in that case, yes. But in the case of Homeboy here, I mean, I think it kind of makes sense in this individual case.
Yeah, this is like the white collar equivalent of being arrested for resisting arrest. Like they're going to freeze your assets so you can't defend yourself. And in this case, I don't know. I wouldn't say I'm glad they did this to Sam. It's not that I'm glad that they did this to Sam. I don't think Sam is. I think he's either going to get Epsteined or Ghislained. I don't think Sam is the guy behind all of this. I think there are other people that are behind the FTX fraud, and FTX was probably funding a lot of things that we're already familiar with, but that no one cares to talk about anymore. That's the extent that that I'll I'll share that. But that's my hot take on FTX. It's like it almost doesn't even matter if Sam um, gets like I think whatever they throw at him, he's going to be fine. That's my public prediction is that Sam's going to get off light, no matter what that means.
Yeah, I don't know, and everyone likes. I gotta have to make a prediction because you know I have to, I guess. But like, I also predict that I don't know. First and foremost, I don't know how it's gonna happen. What's gonna happen? I'm starting to lean towards he's going to get it hard. Whereas in the beginning, at first I thought when this crashed, I'm like, oh, this guy's toast. And then he was out running around free for so long, and so many media puff pieces came out about him and all this stuff. And then I was like, oh no, he's going to get away with this. And then I think he screwed it up, did too much media. And then the powers that were supporting him just were like, screw this guy, let him fall. Because as far as like the FTX situation, which I think there's a lot of situations under that umbrella, the actual exchange and its fraud and the man in charge of that is one such situation. I also believe that he would never have been able to get to this position if it weren't for a lot of help from a lot of high-powered friends, and that's a different situation. So, him getting to that spot and buying off, like being the guy, the chosen one, with all these, with a lot of support, raising capital, etc., and then running on hard times. Of course, they're going to circle the wagons and help their guy, who's funneled a lot of money into their campaigns and things like that. The problem is, I think he went off script. I think he didn't just run the biggest, or one of the bigger exchanges, I should say. He didn't just do that. He also went on his crazy like meth bender parties and stuff, and like just did really dumb stuff. Like he did stuff that his backers were not. He did wild card things, right? Where it's just like he screwed up so much. I'm sure there's I can't remember off the top of my head which character, but there's one of them in The Godfather who was the same way, kind of like he screwed up too much and now they have to like wash their hands of him. And I kind of get the feeling that they're getting ready to do that. They're like, he used to be our guy, but now he started, like, he screwed up so big that now he can't. I don't think he's our guy anymore. I think we got, like, same thing with Epstein, right? Epstein was their guy, but then I think it was too much to where they're just like, you know what? He's not our guy, and if he's going down, he's really going down. Although I think the worst that SBF did, as far as like influence peddling, is already public information, kind of, as far as he funneled money to these things and met with the White House and a bunch of stuff like that. But as far as like, I don't think he was involved. Like, I don't think that knowledge coming out is going to sink anyone the way like the Epstein client list would definitely sink everyone, like so many people. So he's probably going to be allowed to be just tossed. I'm leaning towards, again, neither one would really surprise me, but I'm leaning towards they're going to throw away the key and people are going to like not, or they're going to try to. Maybe he's going to get like, 10-year suspended sentence or something. I don't know. Who knows what it's going to get, but he's going to get something big and people are going to wash their hands of him and just kind of move on.
I could see that, but the thing that stands out in my mind, first of all, I don't think that Sam was going too far off script with the meth fueled parties. I'm not sure that the beneficiaries of his donations are above that. The other thing, though, that stands out to me is people claim that he lost several $billion having all of the advantages that he had, where he could trade against all of his customers, he could front run, he could do all of these things because he had essentially perfect information on the market. Mm-hmm. And yet they're still saying, the news is still that he came up short by $5 billion or whatever that figure is. I just don't believe that. I think if you have that much of an advantage over the market, it is essentially impossible to lose money, even for someone that's having meth fueled parties like Sam was.
Yeah.
And so I wonder where that money went. That's my framework. That's my lens that I have toward this. And so I'm thinking, well, where could that money have gone? And um, in a post Epstein world, I think there's significant demand for that kind of money laundering.
Yeah, there could definitely be. I mean, I'm sure a lot of it went to Ukraine. There was that like offer of like giving money to Ukrainian traders and stuff on the site, and, which is a great cover for like a lot of money going through there. I'm sure, I'm sure a lot of that disappeared. It's also like never underestimate the ability for government entities, which he was not really, but there's some similarities, I guess, as well as just degens to just lose copious amounts of money with nothing to show for it. And so, like, if you're trading at a loss all the time, or not all the time, but a lot of time, you're trading enough at a loss, and then you have to pay all the if all the expenses, like the big splashy ads, the infrastructure, the employees, everything, regulations, everything they had to go through.
An arena.
If all that stuff, if you're just breaking even, then all that is loss. And then it just takes a couple of bad trades to just turn you into that situation, plus a few like yachts. So I'm sure like there was a lot of money that went through. I don't know if there was like, I think this could still have just been everything that he was put in that position to do. He actually did dutifully, but just all the other stuff, he just like fumbled the ball so spectacularly. And it's not like the meth is the problem, right? It's just that it's just that the meth influenced decisions might be the problem, where a person of that age, especially, and that, I guess, sociopathy, that just doesn't have the self-control to steal in the proper way. It doesn't have the just has to take it too far, and then ends up losing everything. So
yeah. It's quite possible.
He who rides a tiger may not easily dismount. So it's kind of where he ended up.
That's my new favorite quote.
What, the tiger one?
Yeah, I've never heard that. That's fantastic.
Yeah, but it is true that once you get in deep on some things, I kind of view the same thing about like the whole crypto world. Like, I'm sure you do too with the whole eat sleep crypto thing. Once you're in it, you don't just like retire from crypto. It just doesn't happen.
Right. It's true. It becomes, I don't know. Crypto is kind of like a drug in that sense. Like it is the most interesting thing, and it might always be the most interesting thing. There's just so many rabbit holes to dive down in crypto that you'll never exhaust all of the mental, I guess the rabbit holes. Like there's just more of them. And that's something I've found in the last 2 years. I think crypto has become, and I'm actually grateful for this bear market, because crypto has become so broad. There are so many different protocols and innovations going on in every different area of crypto that it's hard to pay attention when you're just focused on one or two. It's so tough to keep track of all of them. So, and the bear market is kind of a nice respite from that.
Yeah, especially if you have to pay attention to quality projects versus not quality projects. At least there's only quality left right now, and just they're not all going to make it. Not all the quality is going to make it, but at least it's not like crap. And part of the reason I think it's a rabbit hole is it's kind of everything. It's kind of the everything of the future. And so it's kind of like saying, the internet's a rabbit hole. But then, like, what isn't the internet today? Like, is there anything that isn't the internet? Like, not really. I mean, unless you live in a cabin in the woods, and even then you have to get your Wi-Fi from somewhere. So it's kind of like the same thing, where like everything is being like redone through a crypto lens, sort of.
Yeah, definitely. I like that take. Crypto, I think, is going to be one of those. I see, actually, been thinking about this, and I haven't quite articulated it yet, but I think crypto is one of three emerging technologies that are going to dominate the next 10, 20, potentially 100 years. And those are, and they have like a balancing effect with each other. Those are crypto, artificial intelligence, and quantum mechanics via
Hmm.
consciousness. So you have crypto, which is you have AI, which is kind of like a sword. It's a potentially dangerous weapon. You need to learn how to wield it. It has all these kind of parallels. Crypto is a shield. So cryptography and cryptocurrency are both um, uh, defense, defense systems which are asymmetrically powerful. So it takes a lot less to defend than it does to attack. And then you have quantum mechanics and consciousness, which are essentially like a magic wand. And what we've seen in quantum mechanics and in some studies is that the people and their emotions can influence random number generators at scale, and so there's kind of like an interplay between these three technologies that all have tons of rabbit holes themselves, but there's going to be like a balancing effect. I think those three are going to kind of play rock paper scissors for the next few decades. This is
Yeah, the infrastructure of the future of the human race, kind of.
Yeah, yeah, exactly. That's a good way to put it. They're all going to be at the base layer of the infrastructure stack.
Yeah, and that's kind of like it's kind of interesting how like crypto is the it's like the gas, so to speak, of the world.
Hmm.
It's kind of, and I've been kind of thinking about what makes crypto so unique and crazy. And it's like, why would, like, I'm not like a finance guy, but like, why did I get so into this digital money stuff? And a lot of it is just because it's finally like a decentralized digital tech that works. And the reason it works because the other stuff just didn't have an engine behind it. And like the engine of like the tokenomics of it, right? The actual value transfer associated with things. Because one thing that decentralized systems were not really good at before was allocating resources correctly because they didn't have price mechanisms. And so you have people like running stuff like Mastodon and like where's how do you know how to create a good user experience? How do you know how to like provide enough bandwidth for users? How do you know how to like design it? Like where's the money, design it better? Just ends up being kind of like left out there and no one knows what to do with it. Whereas like I don't think anyone needs to figure out how you're going to make the infrastructure of Bitcoin work, for example, because it does. Just people build mining farms, and I mean, there's a bunch of nuance, especially in the modern day and the small lock Bitcoin and stuff. I'm sure, but like, there's a lot of the base idea. It just works. It's like the transactions run because people are paid to do it. The coin supply is distributed this way. The security model infrastructure just like it's a self-contained thing that just grows as long as you have people using it, and then you have all the crypto systems work because they're funded, and they're funded internally. They're self-funded, and it's kind of that's kind of what makes everything work. And like any decentralized system, I think in the end is going to need a value tokenized element to just run sustainably.
Yeah, I tend to think that's the case too. I mean, this is diving into my area of expertise, tokenomics, and I think tokenomics are everything because incentives. If you look at Charlie Munger has this great quote. He says, "Show me the incentive, and I will show you the outcome." And that's taught me that, and a few other people have taught me that I want to be focused on the incentives of what makes something happen in a system, rather than just the superficial results of that system. One thing that you're talking about, the way I would describe what you just described is those are emergent properties, and
Hmm.
so you don't just like a free market. Like the thing that fascinates me about crypto is similarly to a free market, there are emergent properties that you can't necessarily predict on the other side of a on the other side of a process. Like if you set a process in motion, you might not know necessarily how that's going to play out. Um, but yeah, I mean, crypto, that emergent property, I think, is the most interesting thing about crypto.
Yeah. So, what? about like tokenomics and stuff. That's something like because I do come from like an not a finance background, from like an econ background, and that's kind of what got me into I got into sound money, and then digitally scarce sound money is kind of next. But so I view a whole lot of I take a lot of value in these kinds of things. Now, so what do you think about like first off, what do you think about Bitcoin's original design tokenomic model? Not necessarily small block Bitcoin, because that changed the game a little bit for now.
Yeah.
But I mean, so what do you think of that design? What does it do right and what doesn't it? I mean, and I'm not saying like spend an hour doing this, because I understand this is a huge amount, just of stuff to talk about in a short period of time. But yeah.
Yeah. I love big block Bitcoin's original design. I think it's one of the most beautiful things ever created. I think it was like one of the best inventions of all time. I was saying this the other day. I'm preaching to the choir here, but Bitcoin was seriously one of the best things ever invented. And that's because the incentives were perfectly, I won't say perfectly, but they were almost perfectly balanced and I guess perfect for the kind of system that a big block Bitcoin could evolve into. Like, there are definitely some issues like privacy and things like that, but overall, like, the design of Bitcoin was incredible, and Bitcoin's design and what it meant was what got me into crypto in the first place. I was drawn in by this system that, regardless of whether I wanted to promote it or not, would end up taking over the world because of the economic incentives, and not because of any kind of proselytizing that I would do as an activist or anything like that. All I would need to do is rely on people to be self-interested as they are and participate in the system, because it was more profitable for them to do that than it would be to shut the system down. And so Satoshi's initial assumptions about nation states and how they might behave in an economic system like this turned out to be correct. I mean, we've seen Bitcoin's gotten this far, and there hasn't been a malicious 51% attack. I think that's most likely because the Bitcoin's initial assumptions were correct.
Yeah, I mean, that's for sure. It's kind of interesting how, obviously, when you have the fee revenue doesn't come in because of lack of scaling, and it doesn't seem like the fee per transaction is scaled to where the fee for total number of transactions would have. Mm-hmm. And at some point, that becomes where that like beautiful that it hasn't been 51% attack thing starts to become a little bit less confident at that juncture. And I would kind of posit that the reason it got that way was because of a deficiency in the otherwise elegant and beautiful tokenomic design, which comes to, first of all, I guess twofold. The minor one is the lack of incentivized full nodes. And because of that, I mean, obviously you got mining nodes, right? But as far as like other nodes, one of the biggest concerns that caused, or the narratives at least, that drove Bitcoin small block was it's node centralization. And if you incentivize nodes through the protocol itself, you won't necessarily have outside actors coming in to kind of run stuff where you have like a collection of companies that run most of the infrastructure on top of the Bitcoin network, and then you have to worry about them having other things they do if the system would pay those people. But the big one, of course, is the governance mechanism and developer funding mechanism, which saw, I mean, there's obviously a ton of controversy around exactly what happened with the block size wars, but there's a lot of like influence in a certain direction by people employed by companies who would benefit from that certain direction taking place. And so that one little chink in the armor, right? It's kind of interesting how that sort of ties together the tokenomic picture of one little incentive off causes the beautifully running system to start to like turn into something that doesn't quite run that same way.
Yeah. And that was one of those that I think it might have been possible to anticipate in advance. On the other hand, I wonder if Satoshi hadn't put in the block size limit back in whatever 2011 or so, 2012. I wonder if the small block movement would have succeeded, or would Bitcoin have turned into Bitcoin SV or Bitcoin Cash. I don't know. I was in the Bitcoin. I was in the big block camp, and then later jumped into the Bitcoin Cash community. So we were on the same size of the block size debates. And
Yeah.
but yeah, that I mean, essentially what you're describing is paying nodes for. There were two things. There were paying nodes for storage, because the argument was that nodes would it would become too expensive to run a full node because you'd need to store terabytes of data, which is obviously there's not it's kind of a non-issue because it doesn't cost that much to do. But there were other problems with that argument, and I always felt like it was a superficial one. And then the second thing was governance, and so that the argument against I'm a governance minimalist, and I advocate what are called hyperstructures. So hyperstructures are persistent protocols where the incentives are set up front, and those protocols are not changed over time. So I think it's extremely important to get the protocol correct from the beginning, rather than trying to adjust it in motion later. It's not only more difficult to adjust, and get consensus around that, and everything that entails, but it's also it is it's a security vulnerability. So you can have people taking over your protocol if you leave the protocol changes subject to a vote, or a group of decision makers.
Yeah. I mean, that's. I'm definitely a minimalist on a lot of these things. There's a lot of bells and whistles and everything. That's one of the things that kind of sort of loses me a little bit with the whole Ethereum ecosystem, even though I understand it's probably the number one player in the space. Even though the market cap hasn't eclipsed Bitcoin yet, it's clearly in terms of activity and stuff. But there's a lot of like over complexity in the Ethereum structure, where just so many different things can go wrong, and I'm not really a fan of like pushing everything to L2, and not like a well designed L2, just like like as much as I use Polygon, and it's like the front runner kind of like it's not a very well designed system. If Polygon, just do it on Polygon is your answer. And but as far as like the governance thing, I am also I would say a governance minimalist once you have it. Like you have to have it's the emergency switch that you have to throw sometimes. And because sometimes you hit a dead you hit like an impasse. And that's kind of what happened with Bitcoin. I do agree that without that, one of the biggest arguments in favor of small block Bitcoin became the let's not change anything argument. And where it just became like the small block size won, I don't think on the strength of their arguments or on the community, but I think on the strength of a defensive position of like don't really change anything major. Even though I would argue that SegWit changed more than a simple block size increase would, but on the whole, I do think that that's true. On the other hand, at some point you do run into decisions like Bitcoin Cash didn't have a block size limit, or I mean did, but like it didn't have any problem from that yet, or it wasn't, the plan was always to increase it, and then started running into other governance issues. I mean, I don't know how much of a governance issue I could say the BSV. That's a little bit of a special case, but then the eCash split was definitely a different governance issue, but it was more of like a fork off than a but I would say as long as there's a mechanism just that's extremely simple and you only use it when you need to. And so like, for example, like my greatest exposure to governance, of course, has been deep involvement with the Dash community since 2016. And I'm just thinking about all the governance votes that happened. There's very few. There was one in the January of 2016, which just decided, are we big block or small block? And so that got decided like early on. No one had to deal with that. And then
Hmm.
there have been a few over the years that are usually unpopular, which are like fire this guy, and like no one, man, they don't like that one. Or like, what the one was recent was like, let's, because of regulatory pressure, let's disable the advanced privacy feature, and that one just got smashed too. But that was at least a decision that people had to come to. And there have been a few other ones, but usually it's like there have been a few small ones like, should we structure this thing this way, that I don't think needed to be a governance decision, but just whatever. But mostly it's just like a major governance decision every several years, and it's not even that major. It's not like a block size split level of a decision. And yeah, I agree that mostly don't do governance, but you need to be able to for that emergency switch, because I think in the block size war situation, if you could have just put stakeholders, I guess, which is, there's a million different forms of governance, but if you could put stakeholders, which is the most pure, I guess, the most maybe simple form of like stakeholder, if you'd put them to a vote, it probably big block would have won, I think, by a decent margin. I don't know if it was like overwhelming, but by a noticeable margin is what I think. And then we would just moved on with big block Bitcoin, and that would have been a thing. But because there wasn't that emergency switch, I think we ended up with problems.
Yeah, I see that some form of governance makes sense for L1s, and I'm not sure what that form of governance should be. I think, this is going to be a hot take, but I actually think Vitalik's position in Ethereum is great. I think that the fact that people will listen to Vitalik on many, if not most issues, yeah, I think that's fine, because of the number of decisions that Ethereum has yet to make about scaling, and because of the fact that Vitalik is who he is, and he's had such a track record so far. I think that's kind of like the best system of governance for Ethereum right now. And when I say I advocate for no governance, I'm mostly thinking about protocols that are built on top of L1s, because those, you can just issue a new version of the protocol, keep the old one running, and incentivize people to go to your V2 or whatever that is. But so I can see that Dash has their form of governance that's allowed it to get through some of these contentious issues that have come up, and there are other L1s with different governance. There's Tezos, there's Decred, there's the simple treasury model like Zcash has, and eCash. I actually was in favor of the eCash proposal at the time, and most people were. This was another case of sock puppets coming in and changing everyone's opinion. Yeah, well, I mean, there are people that were legitimately against it, but I talked to a lot of people behind closed doors, a lot of the influential people in the Bitcoin Cash ecosystem behind closed doors, and we had a reasoned discussion, and they were like, yeah, I think this is actually a good 10% treasury fee. And then when it started to get heated, they all flipped, because they were like, no, the community doesn't like this. And I'm like, well, you are the community, and it was fine before, until the mass of people gave their opinion. So
that's the big thing with like explicit governance. As much as I want it to be really rarely used, it's good to have, because sometimes, I mean, having been in like the decentralized space, like the crypto space, for a very long time, I've seen so many astroturfing attacks.
Yeah.
And obviously, I mean, the block size wars were a significant one of that, because obviously a lot of the core developers of Bitcoin at the time got on board with the small block size. That's a slightly different story, but I mean, the Dragon's Den was a real thing. Like all these weird toxic Twitter accounts just showing up everywhere. Like it doesn't. There are toxic maxis today, but the cyber hornets, as Sailor likes to put them, that was a special thing. That like the other side, the big block side, was very all also opinionated, but didn't have that like didn't have the swarm. Just didn't. There was something different, clearly. And then I remember on like much less intentional kind of things. Of course, I remember a ton of drama behind. Not often, but every once in a while, you'd have a very dramatic decision proposal in the Dash community, and then when the votes run out, the votes are very stark. Like you're like, oh, you mean this isn't just like a 50-50 issue. This is like a 90-10 issue. And then I remember this last year with Thorchain, as soon as this whole Tornado Cash thing kind of rolled out, they got cold feet hard on adding any asset that had some sort of a thing, some sort of a privacy function. And as a result of all this drama and stuff, and the official Twitter account tweeting all kinds of weird stuff, they implemented an actual like node vote system of like which is the next chain you want to add. They kind of like, you know, bolted on a quick little governance mechanism, and quickly found out that like 80% or 70% of the nodes were in favor of adding privacy focused assets. Like, oh, that was all nonsense. That was all bullshit right there. Like the AstroTurf. So yeah, definitely the that kind of element of things, the sock puppeteering and stuff. I've very familiar with seeing that.
Yeah. Yeah, that was disheartening back in August, or maybe it was September, when Thorchain was saying they were pausing Monero. I was like, that the entire reason for your existence is to add Monero like to trade against other assets to other chains. And so, yeah, I think, is that what Maya protocol is doing?
Sort of, that I know, and so much is up in the air about about that whole space. I think Maya is mostly going to be like a collection of slightly different assets, just so you don't have to maintain dual liquidity pools. And I think that what they mentioned that they're going to try to add Dash in particular soon, but I don't think they're going to be. I think there's supposed to be a separate exchange, like a third fork that will be focused purely on privacy assets like Zcash and Monero and stuff. And so I don't know how it's going to. This is all like Maya hasn't launched yet even, so a lot of this is just completely up in the air. But yeah, that's kind of, the point is to trade with stuff that you can't do elsewhere. And that was one of my criticisms of, Thorchain, which is a project I'm a very big fan of, was the governance decision. It was kind of like Nine Realms, the development team, just kind of deciding everything. And there were some people running the Twitter account, and they promised some integrations for almost 2 years. And then at some point they got like cold feet and moved off in a different direction. And then it's like, well, community this, community that. Well, we have this. And there's a lot of like funny business where the thing is someone always has the power. That's the thing, is you can't say you can't say, well, it's up to the community. Well, which people, and how do you measure that? And also who makes that decision? And that's one thing with like, I hope I don't annoy any Zcash people by saying this, but I have to research how they arrived at, but I'm not 100% convinced that Zcash has a perfect governance mechanism. Like when they decided to extend the founders reward and they polled the community and all this kind of stuff, I'm sure they did the best they could, but like, how do you really know? Do you really know that this is the way they want to go? Do you really, how do you poll that? And coin holder polling through some kind of a way is the best so far. And I think it'd be interesting to find if there's some better stuff. Like, for example, can you assign immovable tokens of some sort based on activity? I know the NEM had some proof of importance thing with like older accounts, lots of transactions, had more governance weight. It would be kind of interesting to see if without doxing yourself, you could prove that you had spent the most in total fees over the years, and therefore that adds an extra weight in addition to your holdings, because you're an active user, and the way you prove that that's not spam is by actually spending fees, and then that could be added to a weight. But then I don't know if that starts getting the complicated territory of like too much governance now.
Yeah, I mean, there are just a lot of extra edge cases that are created. Like, it's kind of like the same as in law. Like, the more laws, the more loopholes. the more
Mm-hmm.
governance mechanisms, or the more, even more tokenomic
Mm-hmm.
mechanisms, the more features that you add, the more edge cases you create. And so, all else being equal, simple protocols and simple governance is better.
Yeah, as simple as possible. What do you think of? So obviously, Bitcoin and Bitcoin's immediate variants have a hard coded like limit of the token supply, and there's two other models that kind of strike out as a little bit different. Obviously, there's millions of different models, but like Ethereum with the what are the EIP 1559 kind of setup where you have infinite inflation but deflationary, so possibly because of the burn mechanism, possibly deflationary. That so first off, what do you think of that model? Well, my initial thoughts on that, which I haven't made up my mind on if I like it or not, but it seems to mean that a lot of activity on the Ethereum network rewards everyone through the fee burn, like every single Ethereum holder, which seems pretty good, except the actual nodes are the ones processing and putting up the capital for this, or a certain amount of capital, and they there might be that the average just sit and hold kind of person might be doing a little bit of a free rider on that. I don't know. What do you
Yeah,
think about that model?
that was my initial concern with 1559, was that it wouldn't be that nodes might not be fairly compensated. I don't think
Mm-hmm.
that's the case. With the, as far as like the infinite inflation model, I'm skeptical, as I was when it was, the claim in Ethereum pre EIP 1559 was always there could be more than 100 million, but in practice, there will never be more than 100 million Ethereum. And then it gets up to like 107 million, 108 million, and they implement 1559, or started to talk about it around then. And so I'm skeptical of that model. But and additionally, I don't think it's terrible. I don't think it's the worst. It's definitely different because Ethereum was pre-mined, so it wasn't like it was distributed. It was ICO'd, so
Yeah,
it wasn't didn't have the same purpose as like a proof of work coin.
of
Um,
course.
but I really like the. I think the tail emission model has fared really well for
Mm-hmm.
coins that are supposed to be a medium of exchange. So like Monero and Dogecoin, mostly for other reasons. I mean, Dogecoin is like, as much as it is a joke, it's also got a really short block time, so people
Mm-hmm.
want to use it to transfer assets, and that's probably less of a there's less value proposition there than there was
Yeah,
a
of
few
course.
years ago. But yeah, I mean the
It's
tail
fared
emission
quite
model.
well.
Yeah, exactly. I mean it's done all right, and the tail emission model doesn't bug me too much, and that is one of the directions that Bitcoin might go, and so that might be another topic
Oh yeah.
we could talk about if you want.
Yeah, well, as far as the tail emission thing, the idea on paper, like that, or spoken out loud, I should say, of infinite inflation is like, help me, I'm melting. It's like just like a lot of people. It sounds awful, right?
Yeah,
It does, on the other hand, kind of make sense from a certain perspective, and the perspective of if you're a fee based model, then users are paying everything for using it. And that mostly makes sense. Some people do save, and that's kind of the free rider problem. I guess you just hold on to it, don't move it. You still have you still have infrastructure securing your funds, but you're not actually paying for them. So with a tail emission, you're kind of paying a little bit for base security, and then if you use it in addition, it's like more. It's like kind of like you have like a base membership, and then every time you buy extra things, that's extra. And so, on that sense, it kind of makes sense. The people get squirrely about not knowing the total ultimate supply. I think that might be more because of like the sound money gold bug attitude that came into. Although I don't know what gold's entire like infinite supply is going to be like. That's a little
right.
different, but
Gold
like
has a tail emission.
Yeah, gold has a tail emission too. So it's it kind of seems like the tail emission might be one of the better models if you're looking for like a saving and spending. If you're just looking at, well, it's secure, so you'll feel comfortable of holding it and then spending it, then you don't really need it. But yeah, the tail emission seems to be, the more I think about it, pretty good. Now, was it Doge was the first one to have it, or which was the first major project to have it? I know Monero has become one of the poster children of the tail emission.
Probably one of those early coins like Pure Coin or Russell Coin or whatever these other. I'm sure some of them had tail emissions. It probably wasn't Doge. That's the first one. Doge was what, 2014?
I think so, or maybe even before. I can't remember. It was really early on.
Yeah.
2013 maybe.
Okay.
Let me just check real quick. I don't want to talk out my ass too much. But the thing about the tail emission is kind of like it's. I know like Monero really focused on it. I think if I remember correctly, Dogecoin. Yeah, I mean Dogecoin is the end of 2013. I think. So
Okay.
like just before 2014.
Yeah, that makes
So
sense. Right around
definitely
the crash.
predates Monero on that sense. But like, I think the tail emission. I think for Doge, it was meant so there was always going to be more, and you're incentivized to share it around, kind of thing. That was
Yeah,
the
'cause
phrasing around it.
I think it was. I mean, my impression of Dogecoin at launch was always to joke at the sound money meme, like to make fun of Bitcoin. It was like, and there's not only are there 100 billion Doge or whatever the number is, it's like there are 5 billion more that are created every year. Um, and I think it was Jackson Palmer's way of trying to prevent this from being taken seriously, which ironically has led it to keep
Yeah.
to stay afloat. I mean, the fact that there are mining incentives for Doge is keeping it afloat.
Yeah, it's pretty crazy the way that turned out. But especially, I do think it is a subject that I'm going to revisit as far as we talk about Bitcoin, is Bitcoin's tail emission, which probably makes the most sense from a let's not change anything point of view. But at the same time, I think that that's one of the most brand damaging, kind of value proposition damaging kind of, not if you really think about it, but if you at its face value, all of Bitcoin's
Yeah,
branding gets kind of destroyed with the tail emission. And
totally.
only over 21 million, and like Saylor's got to delete all his stuff, and like, you know, it's just, it's ugly. I don't think they would do that.
Yeah, I think, and yeah, I mean that's one of those options that seems like the most practical that in a vacuum they might opt for, but I don't think the community would allow it. I think that is the last resort of any of the possibilities. The three possibilities are tail emission. Then you have increasing the block size, which has been tried and probably might not go over too well, and moving to proof of stake. These are like the three kind of choices that Bitcoin seems to have right now about how to maintain, how to pay miners for ongoing security in the Bitcoin network.
Yeah, I would kind of posit that maybe proof of stake doesn't even solve it. It just makes the problem much temporarily less of a problem. But when enough inflation goes away, you still need fees, and then there's still a capital opportunity cost to that. And then it's over time, like it still becomes much harder to attack because of obviously the stake. But it still ends up being shrinking security over time unless you start kicking the fee revenue up. So that's an interesting one. There's the other one is find a way of like increasing on-chain fees per transaction, which I don't know how they would figure that out because people have always just routed around using the chain. That's kind of how they
Right.
That's kind of how they did it, and that doesn't mean use L2. It means route around using the chain. But yeah, probably that seems a little unlikely. Honestly, in my like speaking of proof of stake though, I do think that adding a staked element to it Like, for example, if you turned like lightning hubs into stakers and added like a second layer of security in addition to that, that would absolutely solve the problem entirely, because if all the money is moving off to L2,
Right.
then who if as long as L2 secures the chain, then no one needs to care. But then you start doing the whole proof of stake stuff, and that's a branding problem, you know? Honestly, I think that one of the more realistic problem solvers, problem solutions, might be a block size increase. And I know that seems crazy from our history, but I think that at some point, if you're like, oh, a modest two megabyte increase is okay, or let's just put it to 4. I don't like that, because it's still, because like, what is it, Moore's law with the electronic, like, computing power and hardware and stuff getting better all the time. I'm sure they could make something about, well, everyone can still run a node if you increase it to 4 megabytes or whatever. That might be what they end up doing.
The problem would be that that won't give them enough fees. Like, if you think about
Yeah.
how many megabytes that's going to be, like, let's say it's 4 megabyte block size with SegWit. So that's like, what do they say? That's a 12 megabyte block size, essentially, because SegWit's super compressed or whatever. So 12 megabytes, and at 1 Satoshi per byte, then you have 12 million. What's that? 12 million Satoshis. So that's 0.12 BTC, which is significantly less than what they have now. And maybe, let's say they're paying 10 sats per byte, then you have 1.2 Bitcoin. And that's still kind of a lot lower. And not to mention, that's like a $2 fee. I don't know what that would come out to right now. I'm suspecting 10 Satoshis per byte would be like a $2 transaction fee. And they might be able to do that. I could see some cases, some scenarios where that makes sense. The best solution that I've heard so far has come from, and I haven't completely vetted this, but has come from the Stacks Foundation. So I talk a lot with Maddie STX on Twitter. He's Maddie Tokenomics. He is the tokenomics lead at Stacks, which is Bitcoin's DeFi-centric layer 2.
Yeah,
And
I know about
Stacks,
Stacks. I got some demand to like put my NFTs on Stacks, but it seems like an interesting solution. I haven't looked too deeply into it, but it seems like an interesting way of getting Bitcoiners into kind of like an L2 shitcoin, so to speak. I'm not criticizing by saying that. I'm just saying, like, a lot of big hardcore maxis don't like Stacks.
right? Well, and that's the irony, because Stacks might be a sustainable solution for Bitcoin's security problem, because it's merge mined with BTC. So you have people trying to mine Stacks that would also be mining BTC. And if Stacks became valuable enough, and all of the DeFi stuff that's going on there became valuable enough, then BTC would be safe at the base layer, or at least a little safer. There are still some edge cases and economic security concerns that come with having L2 assets secured on a not valuable or a not secure L1 chain. But that's the best that I've heard so far.
Yeah, and that's the thing that's kind of interesting is the problem is, like, so like the Stacks chain itself, like, does anyone do transactions on Stacks?
Not like, that's a good question. They're working on native BTC, but I don't think they have like a native BTC transaction. They're not like Lightning. People are not using it to transfer Bitcoin off chain, if that's what you mean.
So it's kind of funny enough. I do think that if Stacks had a Stacks, I'm sure they have a Stacks BTC in there somewhere, like a tokenized Bitcoin on Stacks. I'm not 100% sure. I'm just guessing. They probably do. But that, if they just rebranded Stacks to the Lightning Network, I think that would literally solve. That would probably live up to all of the mythos of Lightning that's been out there for so many years, and just like the security scales, it's easy to use because you can just send You don't have to be like, well, do I have a liquidity path? Do I send too much here? You have to don't do all that nonsense we have to do with Lightning today. It would just be like the elegant solution. And because of Lightning's kind of like, partially because of like the whole hard fork and like anti shitcoinery kind of attitude of Bitcoin, it became that like Lightning could have been so much of a better solution, but instead it just became a like a, whatever they could bolt on with as little as possible, and then the how to make it work ended up becoming very complicated. Whereas I think the Stacks kind of system could probably solve a whole lot of this, especially if it had been like debuted like in 2019 or something, way back when.
I think it's the problem with Bitcoin. Bitcoin innovation is stifled by Bitcoiners because they're just too stupid for their own good, and not all of them, but like Bitcoin maximalists, the ones that are not, they're actively trying to tear down other systems. Like I feel like all the smart ones have left, and there are a few left. There are a few smart Bitcoiners that I talk to, and they have really good ideas, like this Stacks securing the Bitcoin chain. Like brilliant. That would be awesome
Yeah.
if something was merge mined. But I mean, we've seen like with Taproot and like Rootstock, these projects just, they're smart, but they don't tend to go anywhere, and I think that's because they lack community support.
Yeah, and that's why funny enough, like I didn't look too much into Smart BCH, a little bit, but then the problem with Smart BCH for Bitcoin Cash was the bridging was just
Yeah,
entirely
it was centralized,
centralized into
yeah,
one company, which I've been trying to
which
get
blew up.
information. Yes, I've been trying to get
Yeah,
information about exactly what happened, who was at fault, etc. But it blew up for whatever reason, and then that kind of tanked the project, unfortunately. And now they're trying other ways. But something like Stacks, I think, could work really well on Bitcoin Cash because you could, like, the merge mine part would work out. They already wanted to do the rest of things. All you have to do is find out a good, like, trustless bridge between the assets. They were already trying to merge mine things by saying, or not merge mine, but like say like, oh, well, if you have a certain amount of hash rate, then you can run a smart BCH node, which is kind of like, well, if you just have a merge mined sidechain sort of thing, like then they both kind of, it's like a symbiotic relationship. Like that's the
right.
because that's the way to tie it all together, sort of, without
Yeah,
making it like in like the same sort of a thing, you know?
yeah, yeah. Or without requiring a specific stake of another kind. You know, keeping it all in house with that asset. The challenge that I see that I don't think people in the Bitcoin Cash ecosystem have properly considered is that
Hmm.
it is very cheap to reorg Bitcoin Cash. And if you
Oh
have
yeah,
valuable assets on top of Bitcoin Cash, those are at risk. And so this is one of these economic security things that I've been thinking about a lot and looking for. I was looking for ways that this might happen in the BCH ecosystem. For a while, there
hmm,
were some vulnerabilities in the BSV ecosystem, which I suspect have been taken advantage of in those 100 block reorgs that we've seen news about. But I haven't looked deep enough into that to parse all the transactions that went on. But yeah, that's, I mean, a big risk is like, how do you secure L2 assets on an L1 that's borrowing security from that L2? And, going back to Bitcoin's security problem and how to resolve it, one way might be to uh, charge fees proportional to the value of the transaction. And that
hmm,
would completely destroy Bitcoin's it would take away a lot of Bitcoin's credibility and the
of
value
course.
proposition there, but
I mean, that's
that
what
would be at
Lightning
least a way
does.
to salvage it. Yeah, yeah. So Lightning, I take issue with for other reasons. Like, have they
Hmm.
solved the traveling salesman problem where you could route?
I don't remember that one specifically. The problem
Okay,
with Lightning is I think it's been relatively doable to wrap my head around the basic structure and the capital allocation issues it faces and some routing. But as far as like the particulars, there's like a new trick every week about like you got a trampoline payment, you got a submarine swap, you got a loop in and loop out, you got all these other things. You got watchtowers. Wait, you don't need watchtowers. Now we have like there's just so much going on. So I don't, which was the traveling salesman problem.
Traveling salesman, to my understanding, is you route a transaction in one direction and then it's not available. I might be bastardizing this, but the problem that I always saw with the Lightning Network is that if you pull a balance from one channel, you have to instantaneously update all of the other channels. Otherwise, that balance might be double spent and you end up with failed transactions. So maybe they've done a lot of work. It's been 3 or 4 years since I've looked into the Lightning Network at all. But that always seemed like the biggest problem to me is that you can't keep track of all of the channel balances at scale, and so it forces centralization into the network, and you end up with a hub and spoke model. And from what I have seen of Lightning, that is the model that they have now, where most of the payments are routed through large hubs.
Yeah, it's. I mean, a lot of advocates have said the same thing too. Like, admitted that it's get a little centralized out there. It just, it's hard to make it work without like first off reliable zero confirmation transactions, and then big enough blocks you can make cheap enough on-chain payments to where if like every 10th payment is on-chain on the individual level, you can keep it decentralized. The problem just becomes like it only really makes sense to have like large liquidity hubs to kind of taking care of that. And the thing is, we're starting to have competition though, and that's the thing. I love one of the reasons I love DeFi so much, which I didn't care when it came. I just didn't have any interest in it really. But then I started to like wrap my head around what it meant, the implications, and DeFi in a certain sense might end up obsoleting the Lightning Network because, like for example, Thorchain right now has like a saver's vault for it's their their no what do they call it, impermanent loss risk like savings kind of earning option. And on Bitcoin on BTC you can earn about what is it 5% APY right now, staking
In Lightning.
Staking your just L1 Bitcoin.
Oh,
And
sorry,
so-
yeah, in Thorchain. Yeah.
Yes, and so if you have like 10 Bitcoin in your Lightning hub that you're using to manage channels and stuff like that, excluding, like, you have to make enough money not just to cover the transactions, the on-chain fees, and like the infrastructure costs, but you have to make up the capital opportunity cost of what you could be in Thorchain if you had it there instead. So now all of a sudden the per transaction cost you have to do starts to go up, and now all of a sudden Lightning becomes expensive. I mean, I haven't paid under a cent for Lightning. I mean, I don't use it. I use like a couple dozen times a year, I guess, but like I don't pay under a cent ever these days because the hubs that you have to go through they need to make money somehow, and it's not through like fractions of a cent per Lightning transaction because people just aren't using it that much. So yeah, it's kind of interesting how that's kind of working out. How also DeFi competition can end up harming some proof of stake security models. I don't think enough to make a difference really, but like if you earn this much staking Ethereum for Ethereum security versus this much in this liquidity protocol over here,
Yeah.
eventually they're in direct competition, and so the amount that each pays goes up, but also there's less total money securing the chain. And I guess that's a good thing that proof of stake is so, I guess, economically secure because of how expensive it is to attack that you can afford to like lose a little bit of that. But yeah, it's kind of crazy.
Yeah, that was an initial concern of mine with Ethereum moving to proof of stake, was because there were all these other yields available, and you don't know necessarily how those yields are going to be competing with proof of stake.
Yeah, everything competes with everything for something else, and I kind of think that, for example, Litecoin has outcompeted Lightning so far. I mean, Litecoin seems to be, what is it, I think 100,000 transactions a day or more. It seems to be the chosen alternative so far. I mean, there's a million cash coins and stuff, but that's like the one that's seeing the most, reliable volume. You can kind of, plot to payments specifically. It's so, yeah, I kind of love free market competition and what it ends up producing, even if it's inconvenient to me. It's just always pretty fascinating to watch.
Yeah, definitely. I mean, at least there is at least the additional benefit. There's kind of like the side benefit, even if you don't like Lightning, that the
Hmm.
experiment has happened, and that it
Yeah.
can teach us how systems tend to centralize if you don't architect the incentives properly at the outset.
Yeah, I love what I've learned from Lightning. I would never take back my annoying times trying to run a node and stuff. Just the learning experience was definitely worth it. You know.
Yeah.
Well, it seems like it's a good time to start wrapping this thing up. Where can people find more about you and what you do?
Sure. Yeah. So I'm available on Twitter at Eat Sleep Crypto, and I've got eatsleepcrypto.com has my articles dating back to 2017 on mostly on crypto valuation and tokenomics, and then I'm available on Twitter. Anyone can DM me. I'm glad to collaborate to talk about these kinds of
Hmm.
things. Love talking about tokenomics. And escadvisory.com is where I have my business outposts. So we're doing tokenomics advisory and valuations.
Yeah, cool stuff. Well, before I completely wrap it up, I almost forgot. Every time I have people come on the show, I give them a shiny NFT as a proof of work kind of way of saying thanks for taking. So if you, as soon as you get me your either Polygon or Wax address, I don't know if you mess around with Wax a lot. I've given you one of these that you'd only be a guest on the show. That's the only way you get these. I don't sell
Awesome.
those, and they get you into my Discord and Telegram channel, and including like live super chats on these shows and stuff. So now you're in the in club that mostly the plebes have to pay to get in, but since you earned your way on through proof of work instead of stake, there you go. So just DM me an address and I'll get that sent to you.
I'm honored. All right. Thanks, Joel. It was a pleasure talking with you today. Thanks for having me on.
Yeah, likewise. All right. Thanks for watching, everyone. And everyone have a good one.